think a very important topic. We have heard since morning about the vision of real-time payments, what needs to be done in the country. But the fundamental question is that why? Why the fuss? Why the digital payments are actually required? Are these just the nice things to do? It's happening in the rest of the world. What is really the impact and contribution of real-time payments to GDP, or are there any other externalities? So this very illustrious panel would explore and elaborate some of these concepts. On the face of it, we know there are several studies which take very econometric approach, some very modular approach, talk about reduction of transaction costs, float, bank multiplier, and also talk about the social impacts or business models which can emerge and cannot exist now but can emerge supported by the digital payments. So I'll first start with Salim Saab. The first question that I have for you, sir, is that in order to set the scene, can you please elaborate for us what are the different potential benefits and factors offered by the digital payments that can contribute to economic growth? It's a very general question, but I think it's important to put it in the context.
No, I can only answer it. Everything that digitization brings, speed, efficiency, data to analyze, scalability, at consistent or falling cost, and that is a huge contribution in itself to to users, and it has a value that cannot, because it's a lot of it is zero cost, so it has a value you cannot capture in the economy. What's called consumer surplus. I saw a survey they'd done in America recently, where people were asked to say how much they'd pay for services that are presently free. So, email, search engines, Wikipedia, social media, etc. And the average willingness to pay was $24,000 for this whole bundle of services. So if you multiply $25,000 by 50 million users, let's say in the US, that's $1.2 trillion, which is 5% of US GDP. But it shows up as zero in the data because it's not, it doesn't produce cash. Now, altogether, what this article said was altogether the discovery or the research shows that information services in the US have been between 4 and 5% of GDP for years. So where is the contribution of digitization? And what is it actually doing? Is it just replacing things that were already being done? Because unless there's actual production and employment and income creation, the effect of digitization then just becomes an alternate channel which is more convenient, no matter how many dimensions you add to it. Now, coming to Pakistan, where would the GDP contribution of digitization be? Of course, exports. I don't know how much exports are today, say 5 billion, 6 billion, and this could be 4 or 5 times within a decade. This could be 4 or 5 times quite easily in volume. So that's a distinct contribution to the economy, as is the FDI. About 700 millions come in, I think, in the last 3-4 years. So those two are very positives. Those two are great positives. But you come to the domestic economy, and there's been a huge amount of activity in financial services, in payments, in just beginning with e-commerce. There's also delivery systems. There's also on tablets. The education is now in schools at the very basic levels. Is contributing there. There's also e-health, which some people have some people have launched or started with. So there's a huge spectrum. But again, where is this creating new, GDP? And instead of, I'm sure people will have different ways of looking at this, and I'm sure that there will be data that can be extracted. But let me just refer to financial services, since we've been talking about it all this since I've been here. That's been one of the bigger topics, and that seems to be the objective how you integrate finance and economic activity through digitization. Well, we talk about financial inclusion, we talk about growth, we talk about how much banks have prepared themselves to make it convenient to open an account, to finance, to get sort of nano credit or small amounts of credit. All that's very true. The reality is, on the other hand, quite different. The reality is that a cash in circulation is continuing to grow. It's today 42% of GDP, which means 9 trillion cash in an economy of on a deposit base of 22 trillion. 42%. Now, developed countries, that figure is low single digits. India, Bangladesh, that figure is 15%. So 42% is among the highest in the world, if not the highest in the world. And this has grown from 35% 4 or 5 years ago. So what is digitization and financial inclusion, on all the emphasis on financial inclusion? What is it really achieving? Now, what are some of the fast routes to making digitization connect with the real economy instead of simply becoming an alternate channel of delivering what is being delivered already? A more efficient channel, a more convenient channel, a channel that creates a surplus for the consumer, yes, but economy-wise, really, I don't see the additive or the contribution. So what can we do to get this cash, more of this cash into the banks? So 9 trillion, I think I haven't seen any calculation, but the reckoning is that about 30 to 40% of this cash is transaction balances. The rest is the informal economy, cash held for lending in the informal market where you earn 50% a year, or for hoarding, or let's put it more politely, storage, or for land, in land acquisition. Now, we can't deal with the informal economy easily because that's a matter for regulation and a matter for government involvement. But let's take the transaction balances. So if 1/3 of 9 trillion is transaction balances, and if half of that could come into banks, which is what digitization should do, a lot of our domestic remittances, people remitting money inside the country to families in other parts of Pakistan, I don't know how much they are, but there's several hundred billion rupees, maybe a trillion and a half, and none of it stays in the bank. Well, infinitesimal amount stays in the banking system. It enters the banking system. It's cash in and it's cash out. The way these transaction balances can be captured is if e-commerce took off. If you could pay simply with the QR code. Now we know that, but it's so far away from any reality. But let's say we could capture half of this trillion, half of the 3 trillion, 1.5 trillion in the banking system, then through the banking multiplier that becomes, because with that deposit the bank makes a loan, that loan becomes a deposit in the second bank and so on. So the multiplier will be at least 3 times, it could be 4 times or 5 times. That 1.5 trillion can therefore create 4.5 trillion rupees of new loans. And that 4.5 trillion rupees of new loans would be equal to 50% of our outstanding loans. And those loans would happen because banks can't buy more government securities. They're up to their necks. 52% of their loanable assets are sitting in government securities. So they will lend. And then that creates real production, real growth. So that's, I'm not going to suggest what the best techniques are, but one simple way is e-commerce. I mean, 95%, 96% of our transactions are in cash in this economy. And I think less than 3% of our merchants accept anything other than cash in payment. There are problems the banking system can't solve and the state bank can't solve. It has to do with regulation, it has to do with fiscal incentives that the government should be thinking about to bring merchants into the official payment system. And that is the reality. Now, if it can be presented to the government that leave these people, the people who do come into the formal system, the smaller retailers, and leave them tax-free for a certain number of years, or increase their taxes only very gradually, you might see a lot of people shifting, but then that's the thing to work on, to gild the lily in saying how excellent your digitization system is not the point. The point is to actually get the thing to happen, and we know what the barriers are there. So that's one observation, and of course, all this documentation that will result will create fiscal income for the government. Then there are a lot of people who hold cash for religious reasons because they don't want to be in the banking system. I know there are many who accept Islamic banking, but there are those who don't. And some regular issue of sukuks to absorb that money, or Islamic products, where the government's made absolutely no effort to market its securities outside the banking system. 80% of the government's securities are held by the banking system. This is a phenomenal figure. It's like this nowhere in the world. Never, in the developed world, low single digits, and in Africa, countries that are not sort of particularly far, along the path in terms of financial sophistication, even there it's not more than 25%, 30% at the most. In our case, it's 80% of securities held by banks. So if the government then diversifies how it borrows and chooses to look at these other markets, the sukuk market, the private investor market, the same bills going out to digitize, miniaturize your treasury bill. Don't offer it in lots of 500,000, offer it in lots of 10,000. And if your treasury bill is paying you more than your savings account, and is liquid, because the fund that's putting together these miniaturized treasury bills can give you instant liquidity, which it can, because there's a ready market for these bills at any time. I mean, that's another route. So these things have to be tried if we're going to suck in some of that cash and have a tangible economic impact. The other sector is the SME sector, where SME sector has been lagging for all sorts of reasons. The biggest reason, or one of the most important reasons, is that while it was easy for a manufacturer to their access to foreign exchange was very easy, the state bank had lots of foreign exchange. On the other side of it was massive rising debt. Now those days are over. We can't finance. We have a lot of financing problems. The state bank is effectively rationing foreign exchange. So all those manufacturers of ours who bought parts, components, chemicals abroad are now going to have to look inside the country. And this is the beginning of a serious development of supply chains. If you remember, Alibaba started off without any particular, didn't know where he was going to go. Jack Ma, he started off trying to connect. He knew there were thousands of SMEs in China, and he knew there was a lot of manufacturing on the East Coast, and he knew that these SMEs were unknown to the people on the East Coast who were manufacturing. So he set up websites for a few thousand SMEs initially, so that these manufacturers along the coast could see that there were things accessible domestically that they were presently importing. There was no action for a few months, so he told his people to go and start buying just to create activity. And then eventually momentum came up, and as that momentum developed, he discovered he could lend to lots of people because he saw the cash, he saw them selling, he saw the cash coming in, he understood their payment cycle, and he could very easily, and that was the beginning of Ant Financial. And then he went forward with the delivery system. Now for us, that would be this sort of data gathering, this sort of display opportunity for SMEs, particularly as the economy transforms, is going to be critical, and that's another area I think digitization can have a significant impact. Lastly, I don't know what's happening with the state banks evaporated. There's no one from the state bank here? Ah, there he is. Actually, you were sitting over there a minute ago. The state bank was talking about doing what what we can do with SMEs now. What I just talked about is going to take a while, but what we can do with the SMEs now is inter-supply chain, or supply chain or delivery chain, whichever way is the FMCG guy distributing through the distributor, sub-distributor, retailer, small retailer. There's a lot of credit in that chain, and vice versa. When a manufacturer is buying parts, whatever he needs for his final good, he pays with the 60-day lag. So there's credit in that. Both ways there's credit. And what India did some years ago, led by the Reserve Bank of India, was to extract receivables from within both chains, going up and coming down, extract receivables, have them rated, and then list them on an exchange for people to bid. And it's caught on. There's a huge amount of momentum there. Now, Pakistan is full of very good starts and very good intentions, and the State Bank was all set to start doing this 3 years ago, if I remember correctly. But I don't know where we are. I don't know if we're still in the situation where tomorrow is another day. But that would be immediately helpful to people who are borrowing from informal markets. If you could sort of carry out that factoring exercise. I could go on, but let me just stop here. The point I want to make is we've got to start thinking, what else we can do with what we have, this power that we have. Just gilding the lily is really not much use.
Thank you, sir. Thank you very much for very eloquently explaining. I think the reasoning that you talked about in the currency in circulation and how that can be impacted, it's a research idea. And I'm quite surprised that why in Pakistan nobody has really developed a proper model to really document it. I think even for the purposes of RAST, if we are able to document it and it comes into public narrative, it will help the digitization drive. Thanks for explaining, quite related ideas on SME finance and international examples. Moving on to SME finance and supply chain, we have with us Omer, who's founder and heading a fintech, Hubble. Omer, I understand you authored a white paper a few years ago. I read it, and there is a concept that you explained in it was the context-driven payment. I think it would be helpful if you can explain for a deep dive on what it means, digitization and the real-time payments when it comes to supply chain, and what exactly this context-driven payment is.
Thank you, Waqas. So this awakening happened back in 2016. We were working with, I was working for the Federal Board of Revenue with Sohail Jawad's team and with OneLink, and we were trying to create a collection solution for the Federal Board of Revenue for the taxes, for the customs duties and taxes. And in that entire design process, we realized that the architecture of how the digital infrastructure has been made is very consumer-centric, in terms of that it's made convenient for the consumer to make payments to merchants or to businesses, or to do peer-to-peer transfers. But when you want to do a business payment, a B2B payment or a B2G payment, that infrastructure was lacking, and the banks were not ready because their digital teams were entirely focused on consumer payments. And so we spent about almost a year. We were, there was a mandate. We had some international obligations with the World Trade Organization. We had to push it, and the central bank eventually rallied up the entire banking ecosystem, and we were able to launch that for the Federal Board of Revenue. But that one thing that stood out was that payment is a blind event. There is a purpose why people pay each other, and that purpose is, who's paying who, why are they paying. There is a reconciliation that needs to be done when it's a business payment or a government payment. There is data that gets produced that might be used for taxation. There is a data that may be produced for future financing or any other use cases. So we realized that this infrastructure doesn't have the context, and there are technical reasons why it doesn't have the context. There are historical reasons why previous formats of payment data exchange did not allow the movement of non-payment data with the payment stream. So with that realization is when we started writing that white paper that if you want to accelerate supply chain payments or corporate payments or even government payments, context is key. Contextual information has to move. So this is where the excitement began for what was back then on the drawing board, what we call today RAST. That RAST is a modern infrastructure with with a payment format where there's a lot more that you can move. And I can give you several examples of why that context is important in a business or a supply chain event. Because number one, there are two participants in that event. There's a buyer and a seller. He would be a legal entity. He would have a national tax number or a provincial tax number. Someone's getting debited, someone's getting credited. Everyone has journal entries in their book of accounts, and that information was simply not moving along when the payment was being made. So there are so many use cases that started touching why contextual information had to move along with the payment stream. And from a regulatory perspective, from a transparency or supervisory perspective, it's really important, because then it allows other use cases of withholding tax events and sales tax events, and particularly in our case at Hubble, it's that same contextual information that has helped us develop what you talked about is supply chain financing, because it's the same data streams that we were moving for our customers between distributors and manufacturers that we could then use for financing those transactions with partner banks. So that's the significance and impact of context, and that is the promise that Rost has now delivered.
Thank you, Umar. Thank you very much. I think a lot can be said about the several other business models which in e-commerce which would emerge because of Rast. I move on to Carol. Carol, a question that I had for you has been answered in the morning. So I will ask a question which I hope I have not shared with you earlier, but you will be able to respond. In your experience, based on the sophistication and upgradation of the payment system in another country context, what are the different other externalities that we have seen emerging? For example, in health, in education, etc. I mean, you talked about in the morning about, say, Brazil or what's happening there. Have you seen around the payment system such other business models which people are quite surprised that, oh, that's also doable? A service which was available somewhere was not becoming available. What is happening now? In any other jurisdiction that you have seen, if you can share.
That's an interesting question. Actually, there is one thing that isn't that new, but I think is extremely interesting in terms of what you both talked about. Is this working? And you're going to think I'm Brazil crazy, because this is about Brazil and it's nothing to do with their instant payment system. But Brazil was extremely successful going back about 15 or even 20 years ago with their boleto system, where they required suppliers they required that business-to-business payments have an electronic invoice that was registered with the government. And it was a very simple requirement, but it was rigorously enforced that there be an electronic invoice on every B2B payment. And I don't remember the details of it. I don't remember which side had to register it and send it in. But over some 10-year span, it resulted in a dramatic increase in tax collections and formalization, increase in the formalization. And it just seemed, when I'm not an economist. I was telling Dr. Akbar this morning that if I had my life to live again, I'd go and get a degree in economics because it's so fascinating. But, when I hear stories of countries that are struggling with low rates of formalization in the business economy, I think that would be a fascinating thing to study. And particularly now that you have Rast as a tool, be interesting to do it the other way around. Brazil did that before they had their instant payment system, it would be very interesting. Apparently, they were quite successful with it. And I can't resist, since I have the microphone, saying you opened your remarks by talking about some report on the United States and the free services. About, I would guess 7 or 8 years ago, you may have heard of Jamie Dimon as the CEO of Chase, of JP Morgan Chase, which is the biggest bank now in the United States. And he was so frustrated at one point, he gave an investor presentation. He was frustrated because in the United States, banks just simply can't charge consumers for banking services. Consumers won't put up with it. If banks try to charge the consumers anything at all, the consumers just leave and go to another bank. Consumers demand that their banking services be free. And as a result, banks end up charging their poorest customers overdraft fees at ridiculously high rates. And basically this subsidizes banking services for more affluent customers. It's just a horrible business model, but it's sort of what ends up happening. But Jamie Dimon was so frustrated by it, he showed a graph to the investors showing this is how much customers pay for a cup of coffee, this is how much they pay for their newspaper, this is how much they pay for this, and they won't pay for banking services. And I thought that was so funny. It was the same sort of thing when you told me. So I'd love a copy of whatever that was you read, if you can send me a link. But anyhow, that's the only example of that I can think of offhand. So,
Thank you, Carol. Thank you very much. Salim Sahab, I'll quote one statistic to you. Forecasts say that if there is a best case scenario and everything in Pakistan become real-time payment driven or based, the impact on GDP can be up to 6%. Now, it makes it a very important question for the state and state agencies. You have been, central bank head. In your view, what is the kind of institutional framework which is required for a payment system like this? Do you, there are several views and there are several models which exist in the world. In some cases, there is participation or voice of the industry. We heard, Dr. Suhail Munir also that we have missed the bus of open banking and it's open finance now. So in your view, what should be the agency between the constituents and this system which is to be set up in the country? And now that it's evolving, I think there is some room available to design some of these governance parameters for such a system.
No, I have to admit I wouldn't be the best person to answer that. I'll pass that question to someone in a position.
I'm sorry, and I was sidetracked thinking of something else. Did you just repeat?
So, Carol, let me explain that. Basically, it's about governance of raster payment systems. You have seen different models. We have not touched on that. In your view, what's the best model? Is there a one solution which fit for, or do you think that for every situation there is a fit for purpose solution which can be evolved?
That is it's a great question. And actually, when I first as a consultant was engaged working with the Gates Foundation, they sent me a trip around the world and interviewing different payment systems, and that was one of the questions I asked different payment systems. I will say that no, I don't think there's a single answer. I will say that every payment system I have seen has changed their rules of governance multiple times, reflecting the fact that it's a very difficult, for example, they changed their rules of voting. How many, votes do you need to decide on this kind of thing or that kind of thing, or how do you manage the power structure? So it's not an easy thing. I think that the most important issue is determining the mission of the payment system. And I opened my remarks earlier talking about the difference between whether you're running a payment system as a public good or whether you're running it as a commercial entity. And so that's a good starting point. You need to understand what you're doing. And if you're running it as a commercial entity, then it's that, and it's pretty straightforward. If you're running it as a bank association, which is a sort of old-fashioned model, things do get a little complicated then. I think the things are moving away from that as a successful model, a participant-led model. It's hard to do that efficiently, but you still see that from time to time. You want to be able to move quickly if you're doing that. So you sometimes have a participant-led model that has subcontracted the actual operation of it to another entity. So I'm sorry to sort of waffle on this, but you need to have clarity of mission and then a way in which to make decisions quickly, no matter what model you've chosen.
Thank you, Carol. Well handled. I think some of these things we also keep debating with Suhail Saab. Switching gear, I come to you, Omer. Digitization, real-time payments reduce the opacity of the system. It formalizes economy. It brings people into the tax net. But we have a troubled history with the tax to GDP ratio in the country. It was between 9 and 10%. Now I hear that the number is around 8.5% of the GDP. So unfortunately, we hear this comment when people move towards formalization or see formalization happening, that those who come into net are not incentivized and actually penalized. So I want to ask you that you are working in supply chain and that deeply. In your view, are there any inhibitors, or you think that there are some incentives which need to be offered, or a runway, as you can call it, to bring people into net in the supply chain on real-time payments?
So I'll just share our particular experience. When we started off, we thought this was going to be a significant challenge, as Governor Saab had said that 95% of the payments are not digital, they're cash or check based, or in the supply chain it's something else, which is an open check. An open check is where you don't write who's going to cash it out, so it revolves, makes multiple hops in the market till it actually lands with the person who's going to encash it. And of course, when you have that kind of business environment, transparency, it's like finding a needle in a haystack. So that's when we approach the subject, and we thought that this is going to be a very big challenge that people would just not adopt, especially distributors and retailers who are classical MSMEs, that they will not adopt it. But to our surprise, and this is a shocking number, 75% of the transactions that happen on our system are digitally initiated. That means that there is a bank account behind it. That means that there is an internet banking relationship or a mobile banking relationship behind it. That's 75%. And so these are close to like 3,000 distributors, MSMEs or retailers who are using this. And when this started happening, the way you said it, that let the volumes come to you. When this started happening 3 years, we were shocked. And when you dive deep into it, that how is it that now they're fine with it, understanding that this is going to open them up towards tax transparency, but otherwise they were not fine with this. That given a free choice, they wouldn't do it, but now they're doing it. What have we figured out? Because honestly, there was no strategy on our side. It was a roll of the dice. But what we did understand was that there is a thing called corporate sponsorship. Corporate sponsorship is that when we enable supply chains, we always move top down. that there is a mandate from the large manufacturer that I will refuse any payment if it is not made digitally to me through the system. And they have more street power than any banks and than any government, because they are on every corner, every shop in this country, because they have to supply goods. They have incentives, promotions, they do store upkeep, they do store uplift, they do they take you to trips to Turkey. They have so many ways to woo the supply chain operator. And we basically just took a piggyback ride on that. Unknowingly, this is an unintended positive consequence that these transactions became digital. So we thought, let's just do more of it because it seems to be working. So the question is that what is the incentive? Let's say, and Sohail Saab knows that we've tried multiple times, and last time we were successful and the IMF came and stopped it, that you guys can't afford it. We said, let's give them a reduced sales tax rate if they pay digitally. We got that in the law, it became law. And then under the 6th schedule, we had to reverse it. So they said you can't afford it because 1% of your entire supply chain throughput is a significant amount of sales tax revenue that you will lose out on. We came up with some other models that for those who don't use it, have a withholding or a penalty structure, but then that also was probably not business friendly. You can go out and raise a lot of venture capital and dish out free burgers and try to raise transactions like that, the way most of the card issuers are doing right now. You can do that, but that's just not a sustainable way of going forward. At least in the B2B space, that's impossible. So who has the right incentive structure? And the right incentive structure really sits with the manufacturer. The manufacturer wants to sell his product. He has to get biscuits to that shop so that those children can have those biscuits, right? So within his own pricing structure, and we've done studies with, I see Raza sitting over there, we've seen studies with UN on this, that you have to find the pricing incentives within the value chains. If it does not sit in the value chain, you can put all the money in the world, all the smartness in the world, it's not going to work. You're just burning VC money. And they will catch you eventually that you've been spinning the story, which I think they already have caught you now. So the idea is that the value chain has to sponsor it, and there is no one who has a bigger incentive to do this than the producer of that good himself, because he has enough gross margins to accommodate these kind of interventions. I mean, when we're talking about consumer payments, whether it's e-commerce or card-based payments, we're talking about a 1 to 2.5% range. Who will absorb it? That's the question. When we're talking about B2B payments, we're talking about a 5 bips to 10, 15, 20 bips range of revenue opportunity. The question that I have to ask myself every time I make a sale is, who is absorbing it? I can't absorb it. The banks cannot absorb it. The government doesn't want to absorb it or doesn't even recognize that they have to absorb it, because we tried and they had to roll it back. So someone has to take it, and I think it's the manufacturer. It's the manufacturer who's producing the goods. He has to understand what value chain digitization means for him. And what does it mean for him? If we assume that our GDP is $360 billion, we feel that within the ecosystem, within the banked ecosystem, there is additional liquidity that you can produce of $1 billion. That's $1 billion just because you will settle in real time. Because today you're settling after 2 to 3 days. Because today the check keeps on moving and the float is sitting with the issuer and he makes money on the treasury, right? But if it's parked with the man who actually was supposed to have the money, he deploys it into savings, he deploys it into buying more, and that creates $1 billion X additional liquidity within the same ecosystem. I'm not talking about cash in circulation, I'm not talking about informal economy right now, just what is banked. So that is a macro objective for the country. From a data, and when you have something like a RAS stream that allows contextual data to move through, that is almost $2 billion in financing income for the banks. That's $2 billion that they can make of financing these supply chains. Again, the known economy, the banked economy. We're just talking about that. We're not talking about what we don't know. And from a payment throughput, as in what can the payment players, fintechs, PSOs, PSPs, EMIs, banks, their digital fronts, that spectrum is also another, in my view, about $2 billion of revenue that they can make out of this. From a tax perspective, that's $10 billion in sales tax that you can generate if you have a more transparent supply chain.
Can I
Push back on that for a minute? Not on the sales tax, I agree with that. But I have a long background on business-to-business payments also. And one of the discouraging things is that when you automate a process, like where you, as I heard what you just described, and you're $2 billion more efficient than you were the year before, because it's faster. Even though that's true, you don't actually get to capture the value of it, because it's all of a sudden it's just faster, and that's just the new reality.
Yeah.
And you don't get the value of that. They're just like, thanks. You
Yeah.
know, and it's the new reality, and you don't get paid for it. It's just, maybe you do the first year, yeah, thanks. We're $2 billion richer than we were last year, but you know, that's the new reality. And we saw that time and time again when we would automate something, and everybody was much better off than they were before, but there was no way of capturing the value to the provider of the more efficient stuff. It just was more efficient. And you were like, oh.
So you're right. They wouldn't thank you. They
Well,
would.
if you allow.
Yeah.
I had a very interesting discussion with Salim Saab on this. Before you respond on this, let him
Sure,
hear as
sure,
well,
sure.
and then you can.
You see,
I think it's on.
when I talk about something being an alternate channel, I'm not sure anyone's creating any money in what you described. Because what you're saying is the gain is the bank's float loss. So as an economy, what's the net addition? And this is my whole point about digitization for Pakistan. I'm not talking about developed economies. I'm talking about our needs. You know, where I think, and I'm not saying it's easy, where I don't see I see neither the economy expanding as a result. I don't see the smaller guys really getting access to credit where they need it. I don't see, a microfinance is tiny. 5 million customers, 6 million customers. Bangladesh is 27. India has God knows whatever, multiplied by 3. So that isn't growing. These narrow loans are jokes, you know that, 2,000 rupees, 3,000 rupees, and it's proliferating. Now, if you think that's progress, no. I mean, to charge someone, you lend him 2,000 rupees, he pays you back a week later, and you charge him 2,200. You're charging him God knows what, 200% a year interest. And then to see that as success because you've had an economic impact, no, there is no economic impact. And that's why some of the value that you're describing to me is net zero as an economy. Yes, there's a benefit to some of it. So I'm sorry if I'm being a spoil sport, but
It encourages debate, Salim Saab. It's perfectly all right. G.
So what I was saying was that it might not be gratifying how your merchants or your customers will respond to faster settlements. See, for a corporate, we did this about 3 years ago that we started same-day settlements, and that was a game changer because they don't want to lose 1 day of float. When corporate throughput on a daily basis is so high, they just can't not have that funds. In this crisis, I'll tell you that my ops team is almost always trying in partnership with OneLink, trying to settle even before the end of the day, like 2-3 times a day. Why? Because the airline needs to pay for diesel and they just need quick liquidity at 12 o'clock in the morning. And we've done that. That we try to settle earlier So what we're trying to figure is that same-day settlement obviously has liquidity impact on these large corporates in this kind of environment where liquidity has squeezed because the interest rates are very high. But the real, the golden goose is what you can do on the basis of financing and what you can do on the basis of deposits. Because once you have an entrenched digital ecosystem, when you're embedded into a supply chain ecosystem, this is where the banks come in and they come up with their financing platforms and they come up with their deposit bases. And we've seen, I see Sharik sitting over here, we've seen migration from a very traditional bank, I hope they're sitting here, that people left them in hordes and moved to Mizan Bank just because it was a better digital experience. And these are businesses, not consumers. So it is an imperative that this turns into actual gains for the financial institutions or fintechs, that they will get better deposits, they will get deposit retention, and they have then actionable financeable data where they get better yields.
Thank you. Fascinating. And I think the key word is that financeable data. That's really the key word. If with this I'll close the session. Thank you very much to the panel. If there are any questions, please raise hand. Otherwise, okay. G, we have one question. Please.
Putting forward the question regarding taken. What you're actually competing with is cash. Actually, that's what you're talking about, real-time settlement, right? So I think we should look beyond just saying that we lose a day of float, because effectively what you're doing is giving the person a confidence enough that if your money is with you, they would invest more, they would buy and sell goods more, and then based on their growth of their business, they will probably keep a longer term relationship with you. And based on that, the term that you just mentioned, financeable data, you get that and then send them loans, right? So I think definitely when you go real time, it would be a short term celebration, but in the longer term, you would be enabling growth, real growth in the business. So is that my understanding is this?
No,
Do you guys agree with that, or?
That's quantifiably proven that in Mexico, digital supply chain financing has resulted in 30% higher yields for large manufacturers, that their product got sold more because there was additional liquidity available to the smaller merchants to buy more. And that could not have been possible if there was no digital invoicing or digital payments. Because the banks would then not give you credit, they have to rely on that digital ecosystem to be able to lend to you. So, and that's a 30% number, that's a significant amount for a large company. That makes a headline for them.
So intuitively it makes sense. I think for our own team, sir, we have noted there are several research areas on which no credible information, data, or based on that data, I think research findings are available. So with this, thank you very much. I think I would thank the panels. Please join me in thanking them. And if there are any questions, more questions, you can maybe ask them over the lunch.